I'm Jackson, and today we're going to talk about how you can unlock the future of finance. I know that I said that we're going to be talking about crypto, but I still want to keep the title as unlocking the future of finance, and you'll see why.
Oh.
Okay, so a lot of people ask us, what do we do in algo trading? Like, what are we doing exactly? Okay, imagine have you guys seen this movie, The Quiet Place?
Oh.
Right, most people have.
Big block.
Yeah. And imagine the human are money, profits, okay? And that's us, okay? So what we're doing is we're going around capturing profits from everywhere, okay? But in reality, we don't do it like that. It's more like that. So we, through our computers, we create bots, and then these bots would go on the market and capture profits from everywhere. Okay, so that's basically all we do every day for 24 hours. So first of all, let me further explain how the stereotypes have changed. People expect quants or asset managers to be working in the office, looking like the expectation on the left, but in reality today, it's more like the ones on the right. So what is quant analysis? If you look at Investopedia, it would tell you that it's using math, stats, to measure and research to conclude whether or not the behavior of people are correct. Okay, so it's at the end of the day, you're still trying to predict behavior. And that is why MBA is relevant. So behavior, it's something that is so fluffy, right? So is there a way that we can quantify that? How can we quantify behavior? And in our world, it's through liquidity, okay? Liquidity is the most important word that you need to know if you want to understand trading. Through scalable tech, that is how we can profit. So liquidity is the efficiency or ease with which an asset or security can be converted into cash. The most important part of this definition is at the end, without affecting the market price. If you can sell something where it affects the market price, technically you're not really earning anything. For example, if you own Kobe's ring, there's only one of one in the world. You would most likely profit even if you buy for $1 million, but it's still illiquid. That's not something that we're looking for, okay? On the other hand, NVIDIA stocks, it's super liquid. You can sell it at whatever price it is immediately. But is that what you want to invest in? Here are a few more examples of liquidity. If you believe in valuation, then this basically does not make sense already, okay? How can it go from 14K, I think, 1450K, all the way up to 22? I think it's at 24 now, I think. If you believe in valuation, this itself does not make sense. But let's take a look at that. That's reality, right? That's reality. So do you want to live in reality, or do you want to live in the world where you think valuation makes sense? SP 500, gold, it moves the same way. Bitcoin, Nikkei, kind of looks the same. Basically, if you buy anything this year, you profit, right? So let that sink a little bit. What are you profiting from? Like, where's the money coming from? How can you buy everything in the world for the past year and always profit? Like, who are you profiting from? First of all, I want to talk about PE ratio because everyone loves talking about PE ratios. We all know what that is, so I'm not going to explain what that is. But keep an eye on this graph. Blue is the PE ratio of SP 500. Green is the index, which is the price. And yellow is the earnings, okay? So ignore this part because this is 08. So if you look at that, every time the blue line goes up, which is the PE ratio, every time the PE ratio goes up, the earnings is always down. every single time. So if you look at here, it goes up, earnings is down, it goes up, earnings down, goes up, earnings down, etc., etc. Okay. So if you trade on PE ratio, it doesn't work, right? The reason is because the range of PE ratio ranges from 5 to 40, excluding 2008. So how can you guess what the PE ratio could be? Another example of liquidity. So this, I got this from Investopedia last week, I think. So these are the things that people are worried about. Nothing is about valuation. Nothing's about valuation, okay? The things that people are most concerned about is the election. But by the way, does anybody know what the inverted yield curve is?
Long-term bond return.
Yeah.
Lower than.
It- It's the, yeah, exactly. So the inverted yield curve is what we call the 10-2 curve, okay? This is the single most important curve you'll ever see, okay, in trading. If you look at it, the gray is recession, okay? Each time there's a gray, there's a recession, okay? And look at this. Every time it crosses zero and goes to negative, and it goes back up, there's a recession, okay? Right here, goes down, goes back up, back up, back up. There's always a recession, and there's where we're at right now, right? That's where we're at right now. And right now, I can say that there's no recession, but I don't know if there's going to be one. But if you look at that, what it means is what it actually is saying is 10-2. So 10-year treasury return minus 2-year treasury return. If it's at negative, that means a recession is coming. Okay. I actually need to press back. So let's talk a little bit more about crypto. Okay. So this is a coin. Has anybody heard of this? Dog with hats. Anybody trades it? Yeah. So at the peak, right there, this person tweeted that. It says that it's gonna use 690K to do a promotion on the Sphere in Las Vegas. This is another example of liquidity. Now I'm gonna go into how we value crypto, right? So I talked about liquidity and what it actually means, but how do we actually value crypto? Crypto is different from any other assets, okay? So, but before I talk about that, I want you to zoom out a little bit and take a look at how much things are worth in the world, okay, in a grand scheme of things, okay? So that is the top 5 stock market in the world. That's their market cap. And we all know that market cap is outstanding shares times price. And gold is right there, okay? So the market cap of gold is right in between US and China. If we look at Mag 7, Mag 7 is the single most important stocks in the world. In combination, the yellow is Mag 7. In combination, their revenue is higher than South Korea's GDP. Okay, that's how powerful Mag 7 is. And if you look at the prices, silver is right in the middle of Mag 7. And another important point I want you guys to see is that Bitcoin is double of what it is of Tesla. Bitcoin's market cap is double of Tesla. So why are people valuing Bitcoin double of Tesla? Right? I want you guys to think about that first, okay? And in the bottom is the AUM of asset managers and hedge funds. So AUM means how much money they actually have, okay? And look at it, compare it, and tell me what you see, right? BlackRock has 9 trillion. Do you think they can move the Hong Kong stock market? Maybe, right? Do you think they can move the US stock market? Probably not, right? Okay, so let's translate it into Bitcoin, right? Do you think they can move the Bitcoin market, right? Let's not talk about valuation. Let's talk about incentives. Are they capable of doing that? So that is a chart of like, you can see exactly how small Bitcoin is worth right now. It's worth 1 trill. You know, it's really small. Okay, even if you compare to arts and collectibles, it's really small. So what I want you to get out of this chart is think of them as how well you can transfer these assets from one person to another. Okay, gold probably not so much. Art, not at all. Cars, really hard. Equities, better, right? Real estates, not so much, but the law helps you with that. Bonds and money is kind of similar to equity. If we look at the purchasing power of US dollar, whatever you had in 1913, if you had $1, it would be worth 3 cents today. That is not going to change. The US is going to continue to print money, and it's going to worth less and less. Okay, so what people do is they invest in equity because it has a stable return of 5 to 8%, and they try to beat inflation. That's why people always talk about beat inflation, beat inflation. So if you don't beat inflation, you're not preserving your own money. Okay, so the chart on the right is a really important chart. So if we compare the supply, okay, which is the market cap, the U.S. Treasuries is it's unfixed, meaning they can print as many as they want. Okay, gold is semi-fixed. Bitcoin is fixed. However much many Bitcoin is, there will only be that much. Okay, it cannot be changed. All right, so just keep that in mind. That's very important. Does anybody know why gold is semi-fixed?
The reserve can increase.
Yeah, because they can always find more gold mine. Like, you know, somehow they find it all of a sudden, and then they can have so much more gold. Okay, so that means it's unfixed, right? So the gold prices they fluctuate as well, right? Volatility obviously is high. Track record, that's really simple. Governance, these are both decentralized because gold cannot be controlled by anyone. That's centralized, and that's what we're scared of, right? So it's a centralized investment, but whereas it's deflationary. Okay, this is also very important. Low cost to move, low cost to move. Okay, so after we look at all these colored blocks, let's look at the market cap of these three: 25 trillion, 14 trillion, and 1.3 trillion. It's a fraction of what they're worth right now.
Yeah.
Okay, so I still haven't talked about valuation yet, and this could potentially be an answer or a direction to how you can value Bitcoin. Okay, so this is what Nikola Tesla said. If you want to find the secret of the universe, think in terms of energy, frequency, and vibration. So if any accountants here, CPAs?
We do. Oh,
Nice.
MIC.
Nice. So if we compare frequency equals energy over vibration with this accounting formula, which is useful life equals asset over depreciation, we kind of get something like this, okay? So these two combined would be that, okay? So the lifespan or the duration of something equals the money or what it's worth over trade, okay? So if we work the formula, we have something like money equals lifespan times 1 minus transfer cost. And if we replace that with Bitcoin, so Bitcoin's price would be infinite times 1 minus near zero. So basically what this formula is saying is energy is the capital of the world. If you think about it, like what are countries doing right now? They're trying to find the cheapest energy they can get in the world right now. And that's what all countries are doing. And if you have unlimited energy, basically you have unlimited assets, okay? And transfer cost. If you can transfer energy freely, okay, that is also worth infinite, okay? But every time we transfer energy, we lose a little bit of it. That's the same for asset. Every time we transfer asset, we lose a little bit of it. But if you transfer Bitcoin, the cost is near zero. Okay, so that's why we believe that the potential is infinite for Bitcoin. So that was very theoretical. Let's talk about data. Okay, in the past 5 years, that's the return of Bitcoin. And also in the past 5 years, that's the drawdown of Bitcoin. So what we mean by max drawdown is how much it dropped at max. Okay. So basically, if you were to buy silver and expect a good return, it's a really bad investment. Okay, because the return is 2% and your drawdown is 52. So now that we know that Bitcoin has so much potential to earn, but the drawdown is still a lot, right? So that scares a lot of people away. How do we invest in Bitcoin without being exposed to the drawdown? I'm going to talk about that in a minute, but I need you guys to understand this first, okay? So in trading, we always talk about beta and alpha, okay? I can't explain it as good as this guy. His name is Jim Simmons, and he is the founder of Renaissance Tech, one of the most prominent tech quant firm in the world. He passed away last year, but this is what he said before he passed away. So if you want to understand what alpha is, first you have to understand what beta is, okay? Beta is the stock market as a whole. So if you invest in SP 500, you'll be 100% beta, okay? Assuming that's the curve, 100% beta, okay? Alpha is the orthogonal, is orthogonal to beta, okay? Which means it's either up or it's either down. It can only be up or down, okay? So that's your alpha. If it's up, you're positive alpha. If you're down, then you're negative alpha. And what he says afterwards is really interesting. It doesn't matter where the stock market is for the Medallion Fund, which is his fund. It is going at 90% alpha. So what does that mean? So what he's trying to say is that his fund is market neutral. Okay, it's delta neutral, which means they're not related to the market. Okay, but how can you trade and have a fund that's so profitable? 90% alpha means 90% upwards, right? How can you be so profitable without actually being exposed to the downside of the market? I need to go through a little more definition first. So algorithm, it means trading with bots. Quant analysis, it means we're trading using math and stats. Okay, these two things can happen at the same time. Okay, so we are a algo quant firm. And this chart, everyone has seen this chart before, I'm assuming, right? So we're saying that people don't believe, and then goes to euphoria, and then comes down, right? And then people are angry, they sell, and then it goes back up. Everyone has seen this chart. I'm sure people have traded, bought something along the line of that, and then sold it around here, right? That's your heart trading, right? You're not using data to trade. So what we do with quant is that we're not actually buying and holding. That's not what we're doing, right? Because we have algo, right? So what we're doing, we're capturing all the spreads at each period, okay? So the spread is high, what we'll do is we'll buy and we'll sell at the same time immediately. So that is high frequency trading, okay? So long story short, the more volatility there is, the more profitable we will be. And this graph will always happen with any asset, always happen, okay? So I'm gonna tell you a little bit more about the business in quant as a whole, okay? If you look at the graph on the left, people are investing in energy and tech, okay? So that's where M&As happen. If you look at this one on the right, you can see what people are talking about. You guys can go to IoT analytics. They update it every quarter. You'll see all these like data points moving around. They shift around. Okay. So right now, what is important, but not a lot of people are talking about, is still AI application. Okay. And basically building automation, that's what we're doing. And if you look at these two graphs, you would understand what liquidity means. Okay, these things are fluid; they change all the time. And in trading, you have to be fluid as well. Okay, you have to understand where money is shifting. I'll give you another example of liquidity again. Can't emphasize the importance of that. ChatGPT was launched in November of 22, and right after it was launched, all these companies started firing, right? All of them started firing. Do you think they're firing because ChatGPT on that day can actually replace people? Probably not, right? So what were they doing? Okay, McKinsey started firing too. Okay, so when we want to value a tech, right? Because tech is always new. It's really hard to value tech when it's new. So we always ask the market. We look at the reaction of the market to see how much it's actually valued. So if you look at the prices of all these companies that was in the last slides, all the ones that did the firing, their stocks went up. Okay. And all the ones that did not fire, their stocks went down. Okay. So that was the value of AI immediately. Okay. So if you want to understand newer tech in the future, that's a really good method. Okay. So I guess you guys will be interested in this. So I kept this in the slides. So this is the market trend of algo trading. Right now, it's super fragmented. That's one of the reasons why I'm here today, to be honest. Other than Chow giving me a great opportunity to speak, it's because not a lot of people know about this industry. Everyone's thinking about consulting, IBD, but no one really talks about quant trading. And as I mentioned before, knowing computer science is not the most important thing. It's important to get your foot in the door, but that's not the most important thing. It's how you look at the market, how you understand liquidity and how it works. So if where is it? So right now we're expecting the growth to be the largest in APAC, which is where you guys are right now. So there's a huge opportunity in quant trading. I hope you guys really do look into it. So I'm gonna I want you guys to start thinking about like how things actually work in crypto. So we can see in this election, both Trump and Kamala Harris, they're really involved in the crypto community. And this was from Business Insider. Crypto Bros 2024, how a tiny tribe of fanatical investors could sway the election. So crypto is the reason why crypto, even though it's such a small community, it can really change the election is because of the power of these people have, okay? These crypto bros, they have really tremendous power that can change a lot of things in the world. I'm going to explain to you why in the next slide. But first of all, I want you guys to see this first. So 74% of users focus on X, which is Twitter, when they look for news on crypto. So that is also the source where I get my news from. So if we look at Elon Musk's Twitter followers, he has 200 million. If we look at this guy, Wall Street Silver, he has 1.4. And then we look at this guy, 6529, he has 500K. Do you guys know why these people are anonymous? So we call these anonymous accounts. Do you guys know why they're anonymous? Is it because they're fraud?
They're just too rich.
To be honest, it could be fraud. It could be not. But with an account in Twitter, any accounts with over 500K followers, you're most likely not just some like random bot trying to tweet. Okay. So one of the reasons why these people are anonymous is because they actually want to tell you the truth of what they think. Okay. So if they were a person, there are certain things that they can't say. But these things is basically what moves the market. Okay. It's all these things that nobody talks about. Right. And their incentive of doing that is obviously they get followers. Right. And these are followers where they can actually move the market with that kind of power. Okay. So that is one of the reasons why if you follow the right anonymous accounts, you'll get some of the biggest insights you'll see on the internet. Okay. And you'll probably won't be able to see anywhere else. And the good thing about Twitter is that like it's relatively okay for freedom of speech. So it's up to you if you're going to take the red pill or the blue pill. If you want to be a trader. If you do, then I urge you to take a look at these anonymous accounts and see which one you think is relevant to trading.